Hey guys, hope you're doing really well. Today we're talking about a different topic. Very rarely do I talk about investment topics or where I think certain markets are going. But I thought it's pretty important this week to touch on where I see generally investment markets going in 2017 and how you should position yourself for some amazing opportunities which are about to come up. Okay, so I want to backtrack a little bit to 2009. And 2009 was a really interesting time. I'm not sure how many of you remember it or remember what took place, but it was a time where financial markets really shook up. There was a lot of uncertainty in the market. It started out of the United States and it trickled throughout the rest of the world. And since 2009, governments all around the world have been just pumping money into the financial system. That's why rates are so low. That's why property prices have risen so strongly. And that's why a lot of stock markets around the world have done really well. And what I look at is major trends. So I talk to you on a weekly basis about habits, about qualities, about the way of thinking. Very rarely do I drill down into markets themselves because markets themselves don't really matter too much. I look for long-term trends. And the way I'm reading the investment markets, the way I'm looking at investments for myself or positioning investments for my clients next year is from a very cautious perspective. And I'll tell you what I mean by cautious. And I'm going to tell you what to do and how to position yourselves in a few minutes. But by caution, I mean this. There's a lot of cheap money flying around. Interest rates are very low. And many people have jumped into investments without necessarily checking the quality of what they've invested in. They've just sort of jumped in. And that's fine when markets are going up. You can sort of fluke it and do really well. But markets don't move in a straight line. And I'm not sure if things will change in 2017, 2018. I don't know. I'm not predicting the markets. But what I do know is that there's a sense of complacency starting to creep in. And when things change, I feel that things are starting to change. There is a period of denial where people just deny the fact that they've invested into really poor assets. And that's very problematic because that's what gets you in trouble. And a lot of people that I saw getting in trouble in 2009 were those that denied the early signs. And, you can deny the signs when the market's going up and you can deny signs when things are going down. And I'm not necessarily talking about property or stocks. I'm just talking about general investment prices. They all sort of track each other. And denial follows complacency. And then from that, people start to realize, oh shit, this is real. And by then, it's probably a little bit too late to reposition yourselves. So what I do is I look for signs of a change in the market. I don't panic. I don't overreact. I wait for that to be confirmed because sometimes prices can go up and down. And you might be investing in a business. You might be investing in property, you might be investing in stocks, or you might not be investing. You might be sitting on the sideline really, really confused as to what to do. And you might be watching. And it's very important to watch trends and let trends emerge. And then when they do emerge, don't be complacent and don't ignore them. Take them for what they are and reposition. And so that's what I'm doing in 2017. I think when it comes to property, so we're in the property business, we run a property advisory business where we help investors buy brand new property in Australia in the three main metropolitan cities, which are Sydney, Brisbane, Melbourne. We're looking very, very selectively for opportunities and we're rejecting a lot of deals that are coming through our office. And many of our competitors are actually recommending and pushing the stuff that we reject. And that means we do less business, but that's okay because when things change, we're quite comfortable with what our clients have gone into. And I'm becoming more and more selective to the point where somebody said to me last week, it's almost impossible for you to recommend something. And that was a sign for me that we're doing the right thing. So be very selective. And if that means you're not buying anything, then that's fine. If you're not buying quality, then you're in trouble. You really need to be buying something that's of quality. If you're looking at a business, if you're looking at a stock, if you're looking at property, it needs to be very, very high quality. And I'll get to quality soon. I think this the second and most important thing to do is to focus on creating more sources of income. And a lot of people don't talk about this. A lot of people won't talk to you about this. They'll say, hey, buy such and invest in such and such. But to me, the amount of money coming in determines how much money you invest. Okay, so if you're making 50 grand a year and managing to save 10 grand of that, you're doing a great job. You're only going to be able to invest 10 grand. But if you're making $500,000 a year and you're saving 100 grand, you have 10 times what you had. And so a lot of people get complacent and try to look for easy investments, and they end up taking higher risk to make that extra residual. And what I say is periods like this are a great time to prepare for opportunities, not only to be selective to investments, but also to focus on growing your sources of income. That is key. And that doesn't mean you leave your job and start a business. That doesn't mean you go out and start a new venture. There are different ways of doing it. But that just means you start thinking of ways to expand the amount of money coming in, to diversify the amount of money coming in. Because when markets change, as I feel they might in 2017 and 2018, your job, if you're working, your job's going to start becoming a little bit riskier. If you're running a business, guess what? Your customers and your suppliers will start to become a little bit more apprehensive. And so if you've been lazy and if you've been complacent and you've ridden this investment boom since 2009 and you're just expecting things to wobble along, you're going to be in for a real shock when things change. Again, I don't know when things are changing, but I do know that the smart people that I watch, that I talk to, that I mix with, and that inspire me are those that are now at this point in time looking at expanding their sources of revenue. They're looking at diversifying where the money comes in, not just what they're investing in, but the way in which money's coming into them. So that's very important. My message to you this week in controlling your finances, we talk a lot about habits, we talk a lot about determination and planning and goal setting. And this week I want you to think about the money coming in, the money going out, and the money you're investing and how you're investing it. And what really pisses me off with a lot of personal finance writers or advisors or people you watch on TV or guys that publish stuff is they focus on how you can cut your costs, but they don't focus enough time and attention on helping you bring more in. One way of saving is to spend less, but the other way is to make more. And there aren't a lot of people out there that openly encourage you to make more because they don't know how to. They don't know how to advise you to do that. Because if I say to you, hey, make more money, you're going to come back and say, well, how do I do that? Smart ass. So my message, guys, is start thinking about that. And in the next few weeks and months, I'm going to start publishing a little bit more content on expanding your sources of revenue and reducing your vulnerability to shock. I'm going to keep an eye out on investment markets. I'm going to see and hear what people are doing in the market. I'm watching the US stock market very, very closely. that might not be important for you. You might not be, investing in the US, but a lot of these US companies are major employers right around the world. You might be working for one, or you might be dealing or trading, or you might be working in a business that has a major customer that's one of these US businesses. And so it's very important what happens there. I'm watching the property market in Australia quite closely. We are a property business. We advise clients on where to buy property and what type of property. And we're very, very selective. And I'm watching, the Sydney, the Brisbane, and the Melbourne market in particular. Melbourne's a market that I feel quite uncomfortable with, and we haven't actually recommended anything in Melbourne. For those that are international, Melbourne is, the second major city in Australia, and a city that has attracted a lot of foreign investors, particularly from Asia. And I'm looking for business opportunities. We've always got an eye out for businesses that we're either looking at buying or tying up with, or that are doing something great in the market that can inspire us to also do a good job. And what we're seeing in the business community is a lot of complacency. A lot of businesses are actually looking at going out there and raising money, not necessarily looking out there and getting customers, or building a great product and helping a lot of people. A lot of businesses out there are now just focused on, we raised X amount of money. We raised $1 million, $5 million, $10 million. But all they're doing is delaying the day in which they need to sell something to somebody, and it needs to be something really good. Otherwise, people won't buy it. So complacency is definitely there. Put your guard up. I'm going to point you some awesome insights, raw insights straight to you. Subscribe to my podcast. I'm looking for opportunities, guys. I'm looking out there for opportunities. We're not dwelling on problems, but I'm experienced, and my team is experienced enough to see problems when they emerge, to see signs of problems, to see signs of complacency, and make sure that we don't get caught up in that, and make sure that we actually benefit from that and profit from that, and I pass that on to you. So have an awesome week. I'm keeping an eye out. Make sure you subscribe to this podcast, share it with your friends. Send me messages, let me know what you're thinking, let me know what you're seeing, and there's going to be some awesome opportunities. So get ready, focus on your income, focus on bringing more in, so that when the opportunities come, you can invest more and we can do more together. Take care.